If you're looking to renovate your house, buy a new car, or pay off high interest credit cards, increasing or topping up your home loan might give you access to money you need. But how does it work? What are the pros and cons? And how much might you borrow? Let's take a closer look. First of all, why top up a home loan? A home loan top up or increase lets you borrow against the home equity. You may have built your current property. You can then use the borrowed money to fund another goal you might, such as renovating your home, buying a car, going on a holiday, paying school fees, or consolidating debt. Home loans normally have a lower interest rate than credit cards, personal loans, or car loans. That's why topping up can sound so attractive. But before you decide to use your equity in this way, it's important you consider the pros and cons and how it might serve the purpose you had in mind. How do home loan top-ups work? Top-ups or loan increases are only an option if you have usable equity. So what's that? Let's start with what's equity. Equity is the amount of money you have invested in your home. If you sold your house today, your equity is the money that's left in your pocket after you repay your loan and other costs. If the value of your home increases, so does the equity. What is usable equity? Your usable equity is how much of your equity you can access as a loan. Your bank or lender works this out by using a loan to value ratio, or LVR. When you're calculating how much equity you can use, most banks look for an LVR that is 80% of the current value of your house. This means your usable equity will be 80% of the value of your home minus the current balance owing on your home loan. So if the current market value was $500,000 of your property, you would times it by the 80% LVR and you get $400,000. The current outstanding balance of the home loan is $250,000. This would leave you with a usable equity of $150,000. What if I want to borrow more than 80% LVR? It may be possible to borrow more and beyond the 80% with lender's mortgage insurance. The LMI ensure that the lender against the losses on your loan account. If you're going to use LMI, ask your bank or lender how much it can be, as it can be expensive. Next is how much you can borrow. Every situation is unique, and the bank or lender will work with you to determine how much you might borrow. But if you want to estimate now, you'll just need to know three things. Your home loan type. Does your current home loan allow top-ups or increases? You can't increase the balance of a fixed rate home loan, but you can add a side loan to either your fixed rate or variable rate loan. Equity. How much usable equity you have in your home. If you have had a home loan for a while and kept your repayments, it's possible you can estimate how much of your equity you could use using things like an equity calculator. Your financial situation. Can you comfortably afford the increased repayments? Keep in mind that borrowing more will involve additional repayments and potentially a different loan term. Your lender will also take your financial situation into account, including your savings, outgoings, and other debt accounts, when considering whether or not approve of your loan increases. You can use things like a mortgage calculator to see the increased loan amount and what that could mean for your repayments. Tips for staying in control of your debt and setting a time frame for your repayments. Consider what you borrow, the extra money for it, and how long you might keep the asset. Will it increase in value over time, or will it depreciate? If you can use a loan increase to fund a new car, keep in mind that you may absorb a loss when you sell, in addition to the interest you pay on the money you borrowed. On the other hand, a loan increase for renovations could add value to your home. Factor these things into your decision. When you get a home loan top-up, your lender will generally recalculate your home loan repayments based on the remaining term of your existing home loan. But if you choose to free up equity using a side loan, you may be able to choose a different loan term to your current home loan. For example, you could choose a fixed term loan and use the set repayments as a schedule to pay down the extra amount you borrowed. Repay as fast as you can. What if you had 15 years left on your home loan and you replaced the car in 5 years? In that scenario, you could be paying for a car you no longer own. And in terms of consolidating your debt, using the top-up to increase the consolidate and hide interest debts may be a great way to get your debt under control. It works best if you follow some simple principles. Check you can afford the new repayments. Don't take on more debt and cancel credit cards or other loans. Pay off more than the minimum. if you're able to. You could also delay your purchase. Sometimes a good option might be to wait longer and save more, trying to work out what you can pay in repayments and turn that into savings. Waiting longer could have several advantages, such as borrowing less to fund your goal, maintaining your lifestyle without adjusting for additional debt repayments, and keeping savings in your offset account if you have one, to save interest charges on your home loan. However, if you have the equity and you can make increased payments, a home loan top-up or increase could help you get things you want out of life. Applying for an increase or top-up. Applying for a home loan increase or top-up can be easier than applying for other loans. You still will probably need to provide your bank lender with some important updated information, including income, savings, liabilities, assets, and current property valuation. They will also run a credit check on you. It helps you get this information ready before you apply to speed up the process and get an answer faster. If you don't have the information at hand, you can still get the ball rolling. So to sum up, a home loan top-up lets you use the equity in your home for other goals. There are pros and cons to increasing your home loan. Increasing your home loan will mean higher minimum repayments. Repaying your top-up faster could help you save some interest charges. Leave your thoughts in the comments, and if you own or are looking to purchase a property. For more business and financial content, subscribe to Business Ventures.